Hi everybody, we're excited to be with you here today. I've got Joel Jensen and spend a few minutes with you sharing some insight today about short-term rentals. So Joel, maybe before we get into some specifics on short-term rentals, I'd like to just have you tee up a little bit about a dealer versus an investor and why that matters as a real estate investor and owner.
Okay, so as a real estate investor, you need to understand the differences between dealer and investor because the tax code treats them completely differently. A dealer is someone who buys and sells real estate, right? Typically, we're calling them the flippers. So I find a piece of property I want, I go in, maybe I fix it up, get it to where it needs to be, and then I sell it for a profit. Those are the dealers. My properties that I buy are what we call inventory. It's not actually even an investment property. We call them inventory. It's normal income, ordinary income, subject to Social Security taxes by self-employment taxes. On the flip side, I have the investors. And oftentimes when we're talking about real estate, we're thinking about the investor side. Those are the people that go out and they find a property. Maybe they have to fix that up as well, put it out there for rent. They get a renter in, they're making passive income. When I sell that property, it's capital gains, or I can 1031 exchange, for example. But the code is really set up to put you in one of the buckets.
One or the other.
One or the other, exactly.
So this whole short-term rentals is a market that's boomed over the last number of years. And I am renting, but I'm kind of renting these short-term little segments.
Right.
How does the government define that and look at that? What are they viewing you as a short-term rent?
So let me tell you the funny thing. So if I buy a property and I know, you know what, maybe I'm going to use that a few times from here and there. I'll use it for a weekend. I'll use it for this weekend. Maybe I use it 12 days a year. Other than that, I'm going to put it up for short-term rentals, 2-3 days, Airbnb. Some of the other places that you can go for those type of rentals. The thing that people need to realize is that's really no different than a normal rental.
Great.
They think in the back of their mind, oh, because I'm only renting it for 3 days, somehow that's going to eliminate the normal costs or expenses I may have with a normal rental based on the short time that people actually go in and rent it.
Yeah.
So you shouldn't be treating it any differently, actually. When I look at my expenses, I should be putting every expense I have in a normal rental, even though the time period of someone's in there may be short. And then we look at how many days is it available versus how many days you personally used it. Leave that stuff to me, right? Leave that stuff to me. I'll figure that stuff out. What you need to be aware of is I need to treat it like a normal rental. When I hand my information to the CPA or the EA, that has to be like it's a normal rental. Then you look at days, and then I'll figure out exactly how the tax works.
So to make sure I understand this, you're saying I can have a rental in Florida. I can have a rental in Vail. I can have a rental in Newport Beach. Whatever it happens to be, I can use it personally, although there's some limitations there and things of that nature. But even if I'm doing that, I'm still able to treat that as a rental property.
As a rental property, correct.
So I own these short-term rentals, rentals in general. What are some of the things that you see as you meet with people year after year after year that I need to be aware of and be keeping track of to make sure that I'm reducing that taxable liability as much as I can?
So let me give you one of my clients who has a short-term rental. It's at the beach, right, on the East Coast.
Where we want
awesome.
it. Yeah.
Right. So usually that's kind of available during the summer months for the most part. They use it 1 or 2 weeks out of the summer. The rest of the time it's being rented out. The thing you need to be aware of, all the costs that actually go into that property. So because it's at the beach, I need to have beach chairs and umbrellas, things for the kids, games, towels, maybe some floaties, some blow up, this or that, right? So all those costs that you're putting in there that you may use personally is also available for the renter. So you can't just eliminate, oh, maybe I use this for myself and maybe the renter is, but in your mind you're thinking it's just simply a personal item. You actually have to look at all the costs and that you are putting in to make it an actual rental. Furniture, right? Because if it's short-term rentals, I'm putting in furniture, Wi-Fi, cable, all those things that I may use when I'm there, they actually have to go into the box of a rental expense. And then we look at days and how to apportion those things out.
So let me ask you this too, as we look at this, and hopefully I'm not stepping on a landmine here, right? But I have that rental and I have it out there and I need to go out a few times a year. And while I'm there, I legitimately might be doing some maintenance work on it, some things of that nature, but I'm also going to spend some time at the beach. Can I start looking at that travel to go out and take care of it and things of that nature? Where are the lines there that I need to be aware of?
Okay, so if we want to talk about travel, this is probably a whole nother discussion, but here's the key thing when it comes to travel. What's my primary purpose? What is my primary purpose of going there? And how am I spending my time? Am I spending at least 51% of my time for purposes of the business or for that travel? That makes it a deduction, right? So you've got to start with purpose.
So I think at the end of the day, these are all things that you need to be aware of. And if I sit down with somebody like you and I map it out, there are things that I can be doing to increase those deductions available to me, but it does take a little bit of foresight to make sure that I'm looking ahead and doing it a certain way. Is that
Correct.
right?
So if I can sum that up in a statement, when you sit down with your CPA, you shouldn't be asking, can I write this off? You should be asking, how do I write this off?
Absolutely. Thanks, everybody. Hopefully that helps you out. Keep building those short-term rentals. Long story short, keep as much money as you can in your pocket as you do it. Have a great day. We know how important it is for you to keep your business running smoothly. Here at Tax Hive, we can help with all of your tax and business service needs so you can focus in on what it is that you do best. Our entire team of experts is standing by, ready to help out. Schedule a strategy session with one of our experts today.